Hi everyone. A very good afternoon to all of you present here. I'm Nitesha Jain, Assistant Manager of TaxBuddy.com, and my area of expertise is income tax. I'm extremely very sorry for the delay because there was some network issue, server issue in the software, so that is why we came late on this live webinar. Today if we talk about the topic, the reason for our today's webinar is about income tax notice cases. What we are going to discuss in our today's webinar is what all kind of notice cases you receive, how you need to resolve all those cases, and everything whatever you need to know about all the notice cases, like what are these sections, what how you can file your revised return, what is the defective notice cases, what is the intimation under section 143(1). These are all the topics we are going to discuss in our today's webinar. So without any further delay, let's move towards our next topic, which is the types of returns to be filed. First and foremost return, which every individual files for their income tax purpose, is the original return under section 139(1). It is the mandatory and voluntary returns. So, under this section 139(1), in the following cases, the income tax return filing is mandatory. First case is that every person who has total income that exceeds the exemption limit is liable to furnish income tax return within the due dates. Any private, then second case will come that any private, public, domestic or foreign country located and or doing business in India. Then third would be that any firm including the LLPs or unlimited liability partnership or any resident who has an asset located outside India might include the financial interest in some entity as well, or any resident who retains signing authority for an account based outside India. For all these cases, tax return needs to be filed mandatorily in the prescribed form, irrespective of the amount of tax liability on those incomes. Then every HUF, which means the Hindu Undivided Family, Association of Person and Body of Individuals, if the total income of those bodies or entities exceeds the prescribed exemption limit, they are liable to file the income tax return in the prescribed format with the required documentation. Now, in the respective following cases, the return filing becomes voluntary. In certain situations where individuals or entities are not under compulsory requirement to file the return, in such cases their tax filings are considered as voluntary returns, which are seen as valid tax return. Say for example, your total income was below the exemption limit. You are not a senior citizen, so for them your age is below 60 years, so your total income is below 2.5 lakh limit. Up to 2.5 lakh limit, there is exemption limit, right? After 2.5 lakh income, a person has to pay the taxes. So let's suppose your income was below 2.5 lakh limit. You were only having some income from other sources or any other type of income which was below 2.5 lakh limit. So for you, if it is not mandatory to file the income tax return, but if you want to file, then it is up to you. It is your choice that you want to just voluntary basis, you can file your income tax return. And it is very good that you file your income tax return even though it's not mandatory, as it will help you in many purposes, like you'll be able to apply for visa. There will be no problem because you'll be having continuous your ITRs for the all the years. Then if in any year, if you are about to receive any kind of refund, then it will be very easy for you. If you want to take any kind of loan, then for processing a loan, for taking the loan, bank will ask for your returns, for your ITS form of last 3 to 4 years. So for that purpose, ITR will be mandatory. So for this reason, everybody advise that even if you are not mandatorily falling into the return filing limit, but you should file it voluntary. There is no harm in that. Then under section 139(1)(c), Certain classes of people are exempt from filing of income tax. If these classes of people fulfill the prescribed conditions, then central government is empowered to grant them tax exemption. After issuing the notice under 139(1)(c), it should be placed before each House of Parliament for 30 days when the sessions goes on immediately following the notification. Upon the agreement from both the houses, modifications will be done in the notification and it will be effective. Otherwise, all the notifications will be ineffective. Now comes the another section, which is 139(4), belated return. The taxpayer or an individual or any entity have to furnish the tax return before the due date as specified under section 139(1) or within the allowable time by a notice that is issued under section 142(1). If they fail to do so, they may still file the belated return for any prior years at any time until the expiry of 1 year that started from the end of an applicable year of assessment or before the conclusion of assessment, whichever happens earlier. So, but the taxpayer might be charged with the penalty of 5,000 rupees under section 271(f) in case the return is submitted after the pertinent assessment year. Again, there would be no penalty imposed in case the income did not require a mandatory filing as per the provisions under 139(1), even though the returns was filed after the expiration of the assessment year. If you were not mandatorily required to file the ITR and you forgot to file, then in that scenario you would not have to pay any kind of penalty. But if you have just your due date has been expired, after that you are filing your income tax return, which means the belated return you are filing. Then in that scenario you can file it. There is no problem in that, but you will have to pay the penalty amount. That is the case. Now comes the another section, which is the revised return under section 139(5). If you are filing the revised return, in case the ITR was filed within the due date, but later the taxpayer realizes that there were some mistakes or omissions in the filing of the return. To correct these mistakes, there is provision for revised return under income tax under section 139(5). However, a late or belated return is beyond the scope of this section and could not be revised. Revised return could be filed any time within 1 year after the pertinent assessment year gets over or prior to the completion of assessment, whichever is earlier. There is no restriction on number of times that a tax return could be revised within the specified time frame. The revision could be done either in the same and original income tax return form or in different return forms. Once the new return is filed under section 139(5), the original return that was done under 139(1) should be considered as withdrawn and the revised return will be validated. Revised return is allowed for the unintentional mistakes only. Only the section 139(5) is specifically applicable to cases of omissions and wrong statements and not meant for concealments or false statements. For any intentional mistakes or omissions and for any kind of fraudulent filing, penalty will be imposed on the taxpayer. So if you have forgotten to include some any kind of source of income, or you have unintentionally done any mistake while filing your original return before the due date, then you can again revise your return within the specified time limit under section 139(5). And it is always said that the revised return always step into the shoes of original return and your revised return will be assumed as your final return. Your original return then will not be holding any importance. This is all about the revised return concept. Now, coming on to the notices issued part, notices under Income Tax Act. So, you may be surprised to receive an intimation or notice from the Income Tax Department. Even if you will say that I have filed my income tax return within the due date, I filed it correctly, then why did I got the notice? So, it's not mandatory that everything which we assume it is right, I filed the right income tax return would be right in the eyes of income tax department also. It's not necessary. A notice from the income tax office is not something that anyone likes to find in their mailbox. You might have filed your return in due time, but you still receive the notice. The reason, there can be many reasons. Now let's understand why we end up receiving notices and how the same can be dodged to some extent, if not completely, then also. Uh, Under this series, what is scrutiny assessment? The tax department examines the return file, and if it has any reason to believe that the information declared by the SSC is incorrect or incomplete, then the case is taken up for scrutiny assessment. The SSC is informed through issue of notice and is supposed to take the required action as communicated by the department. There is some maths behind selection of cases of scrutiny. There are two types of scrutiny assessments: manual and compulsory scrutiny cases. While the reasons for manual selection for scrutiny are case specific and can be avoided with little care on part of the SSC, the compulsory selection can't be prevented. The following are the most general reasons for the selection of your case for scrutiny, along with ways how you can solve them. Now, uh, first one is that non-filing of income tax return. Any person whose gross income without any deductions is above the exempted limit of rupees 2.5 lakh in case of individuals below age 60 years is required to file annual income tax return in due time. If they have not done so, then they'll be receiving the notice. If you are a resident Indian and you own a foreign asset and or a signing authority in a foreign bank account, you have to file the tax return irrespective of your income. Then even when your employer has already deducted the TDS from your pay, you need to file the return to avoid a notice. So how you can resolve these cases? You can just pay your advance taxes on time and you can file your returns within the due date. Then you will not be receiving any notice. Then second reason would be that there has been some error with respect to TDS. The TDS that you show in your return and what is actually shown on the Traces website might not match. When there is such a mismatch, there are high chances of getting the notice. Now, how you can resolve it? You can request your employer or any person who is deducting the TDS on your income to deposit the amount with government treasury and then file TDS returns in due times. Second thing which you can do is always first reconcile the actual TDS that has been deducted from your total income with your tax credit statement, which is in Form 26 years. Report the deducted if you find any kind of discrepancy. Then third reason behind receiving any notice would be the non-disclosure of other incomes. Every income that has been earned in the financial year is required to be reported in the tax return. People generally ignore interest income on the saving account, fixed deposit and recurring deposits. There are many cases where TDS is deducted at a lower rates by your banker, but you belong to a high tax slab rate. For example, bank deducts TDS on interest at 10%, while you may be falling into the tax slab of 30%. In such cases, you might come under scrutiny for non-disclosure of complete information or an attempt to minimize your tax liability. Some people always have this doubt that on the FD income, which is always reflecting in your Form 26 years. On that, always 10% of TDS has been deducted by the bank. Then some people ask this query that why the extra tax I have to pay, because TDS has already been deducted by my employer also, and on the FD income also TDS has been deducted by the bank. But this thing nobody knows that apart from 10% TDS, if you are falling under any other tax slab rate, like 30% slab rate your income is falling into, then additional tax you have to pay over and above 10%, which has been deducted by the bank. So that is why on FD income, some people have to pay the extra tax in the return filing. Then how you can solve it? like at the year end, request your banker to give the interest statement of your deposits in various bank accounts, or report all the income from sources in your tax return, even if that amount is exempt from tax. And penalty, there is also penalty for concealment of income, and that can be up to maximum of 30% of the tax payable. Yes, this can be the case. Now, there are some proposed adjustment which are under section 143(1)(a). Communication for such adjustment is to send to the taxpayer, wherein if there is any kind of mismatch of the incomes or deductions or any kind of exemptions that you have shown in your income tax return, or and which are shown under Form 16, which has been received by the employer. Taxpayer can reply to such kind of notice. If there is any kind of mismatch, then you can reply to the notice within 30 days period of receiving such notice. You can just send this response by login to the income tax portal. You can just go on to the dashboard page in the e-assessment or proceeding part under e-proceeding sections. In that, you can reply to the notice within a period of 30 days. Then coming on to the next ITR, which is the defective return. Now, who all will be receiving the defective return notice? How you can correct the defective return notice case? So, as per this section 139(9), a tax return is defective if certain documents are not attached while file return. In case the return is considered defective by the tax officer, then the taxpayer will be informed by him and will be allowed to rectify the defect within 15 days period starting from the day of intimation. So if you have received the defective notice case, you will be getting 15 days window period. In that particular period, you will have to correct the return. Following document would be necessary required to avoid your filing to be deemed as defective. A duly filed tax return in the recommended form, then a statement displaying the computation of payable taxes. If the taxpayer maintains books of accounts, then the mandatory copies are P&L account, manufacturing account, trading account, balance sheet, income from P&L, any personal accounts of partners, etc. So if the taxpayer account is audited, then the copies of audit report, balance sheet and audited P&L account would also be necessary. In case of cost audit, the other relevant reports. These all will be required for defective notice case. And for that, you have to need to revise the return again and upload it on the income tax portal. And from that, you will be submitting the response of the your notice case. This would be the scenario. Then about yes, under what is section 142(1). 142(1), in 142(1), you will be receiving notice cases for notice for not filing your income tax return. Basic purpose of this section is that it just tax notice case to inquire the details of the assessee before making an assessment under the Act. It is just like the preliminary investigation going on. If the under this section, assessing officer may ask the assessee to furnish the ITR if they have not filed, then they assessing officer would ask to produce the accounts or documents if the assessee has not shown everything in their ITR. Then he may also ask to furnish the information in writing. All those, like for example, statement of assets and liabilities on a particular date. These all investigation, preliminary investigation thing, assessing officer will issue the notice under 142(1) section. Then 143(1) intimation. If I talk about this, any person, all the income tax return, if filed by the taxpayer, are first processed online. After online processing, if the income tax department will file and if they will find any kind of mistake online, then they will be issuing the intimation under 143(1). Under that intimation, there will be different kind of intimation under 143(1) section. You will be receiving a mail for that. If your return would be filed just without any demand or without any refund, then also intimation will be received you will be receiving that kind of intimation in your mail under 143(1) section only, saying that do not have any kind of demand or any kind of refund, and your return has been processed successfully. Then, if you would be receiving any kind of demand, if your income which has been shown by you does not match with the income shown by the department, then you will be receiving the demand notice stating the reason of the demand and the amount of demand. So that you will have to correct. And the third case would be that intimation which you will be receiving regarding the refund. This will be issued where any interest or tax is found to be refundable, either where there is no discrepancy is found in the return which is already filed. So these are the types of intimation notice which you can get. Then under 143(2) section, you will be getting the scrutiny notice case. Scrutiny notice, the income tax department will file any discrepancies, minor or major in your ITR form, or then they will issue a notice under 143(2). If you have not filed your return for the financial year, then assessing officer cannot issue you the notice under 143. First of all, he must first issue under 142(1), asking you first to file the income tax return. After that only you will be receiving notice under 143(2) for the scrutiny cases, for the production of all the documents supporting the deductions, exemptions, allowances, reliefs and other kind of claims made while filing the income tax returns. Then you must provide the proof related to all your income details, all your income sources. An assessing officer will ask you everything in detail inquiry. That is why they are issuing you a scrutiny notice. So these are the 143(2) section, all the notice cases. Like there would be the limited scrutiny, then complete scrutiny and manual scrutiny. So limited scrutiny would be, it would be just computerized, whatever the computer has given the information. If there is any mismatch according to that, then it will be limited scrutiny. If they find major discrepancies in your income tax return, then it will be your complete scrutiny. And case there will be some manual scrutiny also on the criteria which has been defined by CBDT, and that may vary year to year. So it's not any particular thing. So this was all about the notice cases which you need to file, and how you what are the major returns which you can file, and how you can avoid the notice cases which you will be receiving. So this was all about our today's webinar, and now I'm happy to take up the few questions, whatever questions you are having. If you have any further questions even after the session, you can just write to us at support@taxbuddy.com. Our support team is there to help you out with the question part. Are we having any questions? I think we are good to wind up the session. Thank you so much everyone for joining. See you soon.